Yo, what is good, guys? We are back. Happy trades today. Let's get right into it. Here we go. All right. A lot of you know. Russia has already started invading Ukraine. How does this project onto the markets? Well, it should be bad. I don't know why it's not bad. I don't know why the U.S. Brinks session spiked price higher. But if we come over to the high block right to start, it just doesn't make sense. I mean, I guess we were pretty low down here and they needed to spike it higher. But what's the Asian market's going to do later on today? Are they going to bring it back down and eat away these short positions and keep moving price down lower? I don't know. I think that is a huge possibility because if you come up here, I mean, we don't have that much 25x liquidations except right here. This is a big bubble, and then all the way up here at, the 2800s. And I was saying yesterday that 2850 was my price to completely do a short and sell out. But we only got up to about 2750 right up here yesterday. So I was about $100 off. But hey, if you're looking out and you're taking a short, congrats on the on the huge profits. And well, I hope you took profits when we spiked all the way down low right here. But I do want to say that news is a catalyst for affecting prices, and I'm not buying it. We look at what happened overnight, and I think this was a move that was already pre-planned, but because of Russia, they immediately took that news. So if we go on the 4-hour chart here, okay, and I'm going to do a bar replay for you just to show you, excuse me, just to show you the liquidity levels that we needed to come back to. So this initial one right here, when we first, bottomed out and then spiked higher, this right here never came back down to. So what does it do? What usually happens when we get a massive change in direction and it never comes back down to it? Well, it typically likes to come and eat half of it away. So we'll do it on a slower replay. So if we look at the bar replay, it eats this liquidity right here in a second. And then it'll come all the way down and eat half of that. Well, I went a little too far back, but give it a second here. Boom. And boom. We eat half of that. All right. So that was something that we had to look for. That was something where, we could have, if you took a long position, you went all the way up here and you sold when it hit the 50 EMA, you still would have profited because it had to come back down and take half of that liquidity out. Now, can we see it taking the full liquidity out? Absolutely. I keep saying we have to come down to the $2,000 mark and take out this liquidity. But now what did we do? We just generated more to the upside for the shorts. So that liquidity needs to be taken, especially coming somewhere back to up here. And then hopefully we could come all the way back up, all the way up here, but that won't be for a while. But I do want to say how news is a huge play. This was always the agenda to come back down to this liquidity level to take half of it out. It's just kind of weird. Well, I guess it depends on what, exchange you're on, but we literally put a brick halt at 2,300, at least on the Bitstamp exchange. So it's kind of weird how, you know, all these long positions are triggered right there at that support line. Well, support in quotations, hopefully that is. Um, but you could see how this news play just was an abrupt drop to the downside. Literally, they were already planning it, because you could see right here it's going down, it's going jagged, it cools off, kind of comes up, and then news happens, and it has to, and they just shoot it down as quick as possible. And that's a catalyst, because what's going to end up happening, well, hopefully, is that they now need to have a reversal back up to the upside to start taking out some of the short liquidations, which you can see here. I mean, we're down here. I mean, there are these longs, tons of longs that we could easily wipe out. But look at the balance. I mean, there's more shorts that need to be taken out. And the news was a play to get it to spike down even lower to start bringing it back up, because the market maker needed to take out more of these longs and get in at lower prices. I mean, the market maker has been building their longs, probably around here, in the 2500s, and they continued to build and get at the lowest prices. They have a blueprint that they go by. These market makers, these exchanges, they're constantly looking for a blueprint, and they'll never get tired of it, because us as like humans and the human nature, we get very, very emotional, especially with money. I mean, look at the times that we're living in, where inflation's at the all-time high. What are we going to do for money? Wages are still pretty low. Everyone's really fearful. So how do people trade? They trade with emotions. You have to literally cut all of that out to be cut for trading. Now, I was in a, going over yesterday in my video, talking about how you can succeed without being a day trader and just simply buying at these low levels and waiting until we hit an all-time high. Then you start quartering out of your position. You sell a quarter of, however much you have. Like, let's say you have, 10 ETH. You're going to sell 2.5 at all-time high levels, and another 2.5 in price discovery, then another 2.5 when it drops, and then it should have a final little rally. You sell another 2.5, and then you dollar cost average completely out. When it hits the peak, well, you're not going to time it exactly, but then it'll come back down to these prices right here, and you rebuy back in. Can we go lower? Absolutely. But you don't play around with it. You find your range where price is having difficulty, where there's major support and resistance, and that's going to be your buy-in point for the next crash. This right here is where you buy in now. You don't time the bottom. Sure, it can go lower, but you don't time it. And you just want to set yourself up. Protect your investments. You could take a little bit of a loss. That's fine. Just hang on to it, and then you'll be good in the future. But as far as day trading, I mean, you got to be careful with these news plays, because unexpectedly, out of nowhere, Russia started invading Ukraine. And what happened? Boom. Literally just plummeted down, like in a sharp, aggressive manner. And it's definitely planned. It wasn't planned to go down that sharp, but because you have news as a catalyst, they have to do it that aggressive. And when they do it that aggressive, they chalk up this liquidity right here that now has to be taken back to, which now, could we get this double bottom right here? Well, a little bit of a higher low, but then it's kind of looking like a massive W, which I was going over in the stream yesterday. A lot of people think that war is going to bring more prosperity to the markets. Well, I mean, if you look at the other wars and see how the markets did, I think they did fairly okay. But as far as at least the United States, how involved are we going to be in this war, and how is it going to affect our markets? It's going to affect the European markets for sure, absolutely. And you have to think about that around the world, because what happens every day? You get the U.S. market, okay? They make a play. Was it like 8:30 in the morning Central Time? Their futures markets open up, okay? They make a play for a full hour. It's the Brinks market. What'd they do? What'd they do today? What'd they do? I'll show you, okay? So, coming back. All right. Well, I guess not enough time has passed. We'll go smaller charts, but you can see at 8:30 in the morning, they spiked price up even higher. Okay. Look how much is gone up. It was an aggressive spike. So what does that mean? They want to set something up. So now we're going to trade kind of sideways until the next market opens. Okay? And then when the next market opens, they're going to react based off of this play. So we have still this pool of liquidity up here. All right. Is the next market maker going to attack all this and bring it up? I don't know. But that's something that plays heavy around the world with the markets. If you have one market down, as we saw earlier this week, the US market was out of it due to President's Day on Monday. Not much was happening because they're down a pool of liquidity and you have a huge gap. Then what happened Tuesday? Japan had a bank holiday. Not much happened, little something here and there. But Wednesday, things started going to a normal flow. And then this huge drop. You got to keep in mind that every country and their markets around the world plays a huge factor. Once you can understand the times that their sessions open up, that's when you know when to trade and where to trade. For me, I wake up early, okay? I wait for the US Brinks session. Brinks session happened. They pulled price up, okay? Now we have the US session going. We don't have another session to counteract this. The Brinks sets a tone, and now we as day traders start trading within that. Get in, get out. Don't leave a trade open, okay? If you're day trading. You figure out where you can make your money, all right? Let's go to smaller time frames. Let's go to the 5 minute. This is where we're at. Okay. We got the Brinks session right here. Spiked it up. Then you usually get a little bit of a pullback. But what do we have going on now? Now we've hit new territory because we are now trading, well, at and above the 200 EMA. And we are now above the 50 EMA. And what do retail traders look for? They look to be above the EMAs. These green and red triangles up here, when they're all green light, I'm looking to short because these are indicators that tell retail traders, hey, things are heading in a positive direction. Let's keep going up. Okay. Now it could go up, but it'll come back down. It'll have its little jagged edges, and that's where you trade in. 5 minute time frame is a good time frame. But what do we have right now? We're trying to enter this territory of liquidity all up here from what happened last night. Okay. Down here, we sure as hell can come and recover all of this. But I don't think that's going to happen in the US session. That's going to be another market session. Could be the Asian session and happen overnight where they come back down. And then what happens? Now, if they come down aggressive, then you'll have more short liquidity where then US could spike it back up, attack all of that. It's literally a game of teeter-totter. What does this market do? Where does it end up? What do I need to do now? Where is all the liquidity at? You're literally looking for where all the short liquidity is and where all the long liquidity is. Where do I want to attack? What did US do? All right, cool. US took out some of the shorts. Did we have enough aggression to create more long liquidity? Well, on the 5-minute time frame, not much. So, what will happen in the later markets? Could continue. We could see a continuation and knock out all of this. Depending on how aggressive it comes up, then we'll have more longs to knock out as well. For me, exactly, I don't know. I don't know what's happening with price, but as far as if you're going to scalp, just trade within one market session. Watch the start of it, wait for it to cool down, and then trade within it. Go with it. Go with the flow. If you're an EMA trader, look, it's bouncing off the 50 because we flipped above it. All right, so then what happens? We come up into this pool of liquidity, and then wherever the 50 is at, maybe short a little bit, and it'll come back down to the 50. And you make however much money that you make. All right, it's fairly simple, but yet hard. You have to cut all the emotion out of it and just trade. As far as with what's going on with everything in the world and adding war on top of it, we got a lot of people sending their money into USDT, USDC stablecoins, and also gold because they're looking for safety with their money and they don't want this volatility. If you're a trader, you don't really care because you want to hold your position and you want to keep scalping the markets and make your money. That's fine. But as far as people with the long runs and they want to get, buy back at cheaper prices, they toss their money into gold and then wait for the markets or the news around the world to do something for them to feel safer to say, hey, I can throw my money back into the markets and take a little bit of a gamble here and make some money. That being said, earlier today, gold was it was trending upwards. There was a little bit of money flowing out, but not too much. A lot of money was actually flowing into Bitcoin today, which is why we have some higher prices, especially with the U.S. Brink session. But the main thing is, it was there was a lot of it coming in the States. And it's a little overwhelming to have that much inflow from the States because what was the next market session going to do? Are we going to spike down lower again? Because, if we do spike down lower again, it's not going to be looking good because then we're just going to keep trending down and keep eating the liquidity, which it's fine because it's down there. It needs to be taken, but it's not good for our wallets. Again, I was talking about in my stream yesterday that we had to look out for next week. Was it Friday next week? Yeah, Friday next week. These new news plays in the U.S. That's going to be a huge, I wouldn't say a huge catalyst, but it could definitely be a catalyst. Depending on where price is at, we're either going to get some fear leading up to, this is at 7 in the morning. So 7:30 in the morning. So we'll see what happens with that and the U.S. Brink session. And that's on a Friday, so it's going into the weekend. which should be interesting because typically Tuesday, Wednesday, Thursday is where the highest volume is at. And then Friday, it kind of tapers off. And then the weekend trading is just kind of the Wild West. So we'll see what happens with this going into the weekend. If we have a fairly red week next week, this could be a catalyst play to be a little green heading into the weekend, and vice versa. If it's the other way around, if we have a green week, the weekend could be looking a little bearish, depending on that news. So mark your calendars, March 4th, 7:30 in the morning. It's going to be an early news play, and we will see what the market maker does. Again, real quick, going to the high block. Just want you to take a look at that and see where the liquidity is at in the charts. With that being said, please be careful trading. I'm not a financial advisor. I'm just giving you tools. I'm just talking, and I'm opening your mind to certain possibilities off of technical analysis, mainly liquidity points and the average retail trader off of EMAs. I don't really like to do any, triangles and stuff like that because I'm not a breakout trader. If you want to be a breakout trader, I mean, yeah, you can profit from it, but you got to be quick in and quick out. Dip your hand in the candy jar and rip it right out. You can't be sitting there trying to find a Snickers and all the variety pack, okay? Because that's where you get wrecked, and that's what a lot of typical YouTube retail traders do. I'm not going to name any names, but they're breakout traders, and then they'll tweet and post all over and be like, oh, the price is breaking out, it's breaking out. And then here I am, looking at the high block chart, and, let's say price is like all the way up here where we don't have that much more liquidity to attack. And I'm like, yeah, okay, we're breaking out. Yeah, you can make your profit if you're quick in and out, but a lot of them don't. Everyone is greedy. It's a human nature. You start seeing that excitement. Oh my God, it's finally going up. It's up 5%. Take 5%. 5% is a lot. I compare crypto to stocks all the time. You don't get those kind of gains in stocks. It's like watching paint dry in stocks. I mean, if you want to make gains, you buy now in stocks. The same thing with crypto. You buy now, and then it goes up over time. I just don't understand why people don't get it. And even if everyone in the world understood this, the market maker is not going to care because they know people are going to have emotions and keep trading like this. It just blows my mind. I'm okay with it because I'll make my money off of their mistakes. Every buyer needs a seller. Every seller needs a buyer. It's how the market works. You exchange. Here you go. Here's my shares for your money. Here's my money for your shares. Cool. Done deal. Transaction. Done. All right. Sorry to get aggressive. It's just people, it's just really hard to understand. They get way too bearish or they get way too bullish. It's literally like gambling. You go to the casino, you win your money, and you're like, oh my God, I won this amount of money. Let's try it again. I got profits here now. I'm dealing with profits. And it's like, what was wrong with the profits that you made? Why do you now need to gamble that away? Because now you could lose half of your profits. Cool, you can make a little more. It depends on the gamble. But why risk it? You made 50%. Why do you need 100%? You're going to put everything on the line to get even more? Just be happy with what you have. All right? With that being said, trade careful. You guys are not toddlers. Everyone should be aware of this by now. Just done making mistakes. Risk little money. Don't put everything in. Don't put the house on it. All right. I will be streaming next week, Tuesday, Wednesday, Thursday, as usual. If anything happens playing into the weekend, typically Saturday afternoon, I'll go with the live stream. I'm not gonna do any videos, but we'll see what's going on. As of right now, I'm not going long. I'm waiting. I'm waiting to see what the next markets do. I'm waiting to see how the rest of the news plays out. Plus, today is the last day of, volume-wise trading. Maybe take the day off, clear your head, see what happens going into the weekend with this all this news and war play. It's always positive to see that we get these recoveries, but you never know. You get these spike downs like crazy. That's all I got for you today. Peace out, everyone. Bye.